Today, we're going to break down a question that drives thousands of homeowners crazy every single year. And trust me, the answer is probably not what you think. So, let me guess. You opened your latest mortgage statement, took a look, and wait, what? Your payment went up? But you know for a fact you signed up for a fixed rate loan. So, what on earth is going on? Okay, first things first. You are not going crazy. And no, the bank probably didn't make some huge mistake. This happens to so many people, and it is incredibly frustrating when you just don't see it coming. The truth is, there's this kind of hidden part of your mortgage that most of us homeowners don't fully get. And if you don't know how it works, it can quietly creep up. And yeah, it can totally wreck your monthly budget without any warning at all. It's called an escrow account. And if you have a mortgage, you almost definitely have one. The real key here is understanding what this account is for, and more importantly, why the heck it changes. So let me show you what's really happening. All right, let's start with the basics. The absolute easiest way to think about your escrow account is to picture it as a separate little savings account that your lender manages for you. Every month, a piece of your mortgage payment goes into it, and its whole job is to handle two of your home's biggest yearly bills. So, what are those big bills? Well, it's your property taxes, the money that goes to your city or county, and your homeowner's insurance premium. Your lender collects a little bit of these costs each month. They hang on to the cash, and then they pay the bills for you when they're due. Simple enough, right? And this right here shows you exactly why escrow exists in the first place. I mean, can you imagine getting slammed with a massive tax bill and a huge insurance bill just once or twice a year? Yikes. Escrow stops that from happening by spreading the cost out into these manageable monthly chunks. It's basically a budgeting tool. But if it's supposed to be predictable, why does it go up? And that brings us right to the heart of the issue. See, the amount of money you need in that little savings account isn't set in stone forever. There are three main culprits that can force your lender to start collecting more from you each month. Culprit number one, your property taxes went up. This happens all the time. If home values in your neighborhood are on the rise, well, your home gets assessed at a higher value. Or, maybe your town is funding a brand new school or fixing up some roads. All those costs get paid for by property taxes. So if that tax bill goes up, your monthly escrow payment has to go up too just to cover it. Culprit number two is a really big one lately. Your homeowner's insurance premium shot up. Insurance rates are climbing just about everywhere. And why is that? Well, you've got more severe weather events, higher costs for things like lumber and labor to rebuild, and just good old general inflation. When your insurance company charges you more, that increase gets passed directly into your escrow payment. And that brings us to culprit number three, the one that causes the most confusion, an escrow shortage. Now, this is a real double whammy. It happens when your lender looks back at the past year and realizes, uh-oh, we didn't collect enough money to pay the bills. And that's usually because your taxes or insurance went up more than they predicted they would. So your account is short on cash. Obviously, your lender has to fix this, and their solution is what causes that sudden, sharp jump in your payment. They basically have to play catch-up. Let's just look at a quick example. Let's say your lender estimated your taxes would be about $2,400, but the actual bill came in at $2,600. Okay, that's a $200 shortfall right there. And then the same thing for insurance. They planned for $1,200, but it actually cost $1,400. You add those two together, and boom, your account is now $400 in the hole. So here it is. This is the key to the whole puzzle. Your lender does two things at the exact same time. First, they raise your payment to cover the new, higher cost for the upcoming year. Then, they tack on another extra amount on top of that to pay back that $400 shortage, usually spreading it out over 12 months. That 1-2 punch is exactly why the increase can feel so huge. Okay, so that's the problem. And I know it might feel like you're just along for the ride, but you're not powerless here. You can absolutely take more control over this whole process. Here are 3 simple things you can do right now. Number 1, that annual escrow analysis your lender mails you, don't just toss it, open it up and actually read it. It breaks down all the math we just talked about. 2, check their work. Seriously, are the property tax and insurance numbers correct? Mistakes can happen. And 3, this is the most powerful step you can take. Shop around for your homeowner's insurance. Getting different quotes could seriously lower your premium, which directly lowers the amount of money you need in that escrow account. Look, an escrow increase is definitely frustrating, but it's not some big mystery. Once you understand the why, the taxes, the insurance, and those pesky shortages, you're no longer in the dark. Because at the end of the day, knowledge gives you control over your budget. If this explainer helped clear things up for you, do me a favor and hit like, subscribe, and share it so we can help more people understand their money.